All right, there we go. We're going. And actually, give me a second. I think I need to clear some space on the Zoom because I have it all recorded to the cloud. And I got an email this morning from Zoom saying, yo, your cloud is full, which is funny. Like when you have Zoom emailing you to let you know, okay, let's do this. All right, here we go. We got that going there. And totally cool. Here we are. We have a full group, full crowd, and we have a lot of people that would like to make some money and would like to learn stocks and trading options and all of that fun stuff, right? And what's really cool is we went ahead and identified this week to be the week that we wanted to do this. So sometimes in life, you're lucky, right? And sometimes in life, you're good. I'd always rather be lucky than good because luck means you got it going on, right? Hey, Frida. That being said, because we have Rhino Wealth, the platform that you're on right now, we've been doing this, right? We have people on Rhino Wealth for over a year. So it's not that we don't have a certain sense of the market. We have not purchased anything since the beginning of this month, and we made 41% on Oracle in, I believe it was one day, like 24 hours, right? And we send out emails every morning, and we've said every single morning, we're still looking, it's just not the time. Things are coming down. There's liquidation happening. And let me share with you how liquidation happens, right? So when the circus is in town, everything is great. The Fed is putting in money. Christmas is here. Santa Claus rally. Everyone's happy. Everyone has jobs, or they're resigning from their jobs to get other jobs. You're getting enhanced unemployment checks. I have some questions. Can I ask on this platform? Yeah, Frida, ask away. I'm going to be presenting a little bit, so I might not get to it, but I will before the end, right? So everyone's quite happy. Therefore, everyone is buying their stocks. Everyone is making their investments. Everyone believes your statistics email for last week and tell you visitors, you can mention dates. Leads. Frida, you're asking Rhino, I guess, well, this is Rhino Wealth, but you're asking for the affiliate stuff on the other side. This is just one of the components to our Rhino platform. You're asking Rhino platform questions. So I will go ahead and take note of that, but I'm not going to be answering it here. What you can always do is you do know there's that contact us section on our Rhino website, on the platform, and you can ask those questions there, in which case we'll make sure somebody goes ahead and fixes that for you. But your statistics email for last week, I think, how many visitors? Just ask it on Contact Us, please. Because we do have the lead, was it lead Dino we use with a whole, just ask it on Contact Us. Sorry, get me all frazzled. But anyway, getting back to Rhino Wealth. Yeah, no, totally cool, Frida, thanks. And for everyone that's watching, we have that sorted out. The affiliate platform that we use has been perfect, but the last 2 months, we've allowed reward for anyone that sends clicks because we did not think it was appropriate to go ahead and track the registration to the Zoom because the clicks led to people that were coming on the Zoom meetings. Since then, we've went ahead and rerouted that. So instead of the reward being to those that you welcome onto the Zoom meetings, the reward goes to those that you welcome onto the platform and that go ahead and become a partner of the platform, like you, or those that become owner of the platform, like they participate in the marketplace. Because those are our sites, your reward is no longer just for clicks. Your reward is for the registrations because we can track that because it's our sites. We were never going to give our code to another offsite. That being said, for someone such as Frida or others that are using the affiliate platform, now, of course, all this has been said before, but you might go ahead and see a difference in numbers because you're saying, well, I've been doing this and now the numbers look to be a bit of a drop off. It's not that it's not that your efforts have changed. It's that the freebies that we were offering in the first 2 months of just sending clicks no longer exist because we have upgraded the system that now it's a real platform that rewards actual registrations. Yeah, so again, it's in any type of platform, in any type of business, as a 1.0, a 2.0, a 3.0. We were never going to go ahead and say, all right, we're going to sit in a box until we have a 3.0. No, let's just get it out there. And anyone that's been as amazing as Frida that says, whoa, look at this buffet, I'm going to eat, might see a difference in numbers when the buffet's open and when the buffet's closed, right? So that's that. Okay, getting back to stocks and okay, understood. And we love Frida, right? In fact, Frida had sent us the only photo that we had that we posted on Rhino Digital of one of our members next to a Rhino. So Frida's as Rhino as it gets. But anyway, getting back to stocks, like we've always said, when things are going great, everyone is complacent. It's the complacency that allows a market to tumble. Because when everyone's complacent, you start allowing little things to happen, right? Like say, for instance, you go to work and you work your butt off and everything's fine. Okay, great. Then you go to work the next week and your boss says, hey, listen, I'm giving you $5 an hour raise. Great. The next week he goes, you're doing so phenomenal. I'm giving you $5 an hour raise, but you lost your parking spot. In fact, it's not in the front row, it's the second row. Okay, great. Then the next week he's like, oh my God, this is amazing. Your paycheck's probably great, but we have to move your parking spot from the front row. Now it's at the second row. Now it's at the third row. Before you know it, you've never fought back on that parking spot because everything else is going so well. So you allowed it, you allowed it, you allowed it. Then one day you realize you're in the 10th parking spot, the 10th row, and your work experience is not very good because a storm comes, right? Or a tornado or something where your walk is quite long and it's like, oh my God, I've been so happy. Now I'm absolutely miserable. How did this happen? Oh, the complacency of allowing little things to go, unchecked has allowed me to be in a position that all of a sudden one bad thing and it all falls apart. That's the stock market, right? And that's always the stock market. That's not the stock market today. It's human psychology. It's human behavior. When things are going good, you want more. When things are going really, really good and something bad happens, you allow it. When things are going really good and a bunch of bad things happen, you start paying attention, but you don't really move until everyone else moves. Then when everyone else moves, you say, oh my God, I wish I moved sooner. I knew this was coming. I saw it happening. And look, now I'm left with a whole bunch of excrement, right? And conversely, when things are really bad, you don't want any part of it. When things are really bad and one good thing happens, you say, okay, you know what? One good thing happened. You're going to have to show me more of that. Things are going really bad and a lot of good things happen. One person makes a move and you say, oh, I see what they're doing. I want to participate too. Then everyone moves. That's why you see a stock market that goes like this, right? It goes, what we always say is it takes the stairs up and the elevator down, right? Goes up and then boom. And same thing with a market that's down, right? It goes down and then boom, it flies up because it's the wisdom and or the psychosis of masses. That's what the stock market is. It's an incredibly large amount of people all vying with their most competitive edge, using their most valuable asset, which is their dollar, which actually affects them emotionally because when they're making money, they're happy. When they're losing money, they feel shameful. When you take that and multiply it by the entire net worth of the globe, you have it's quite beautiful how cutthroat that industry is, but that's what it is. So when you see a market that's been doing well, so let's go ahead and rewind back to 2020, COVID happens, oh my God, What COVID really taught us was that there's a bunch of people in this nation that just don't matter to the economy, right? All of the people that got unemployed, how many do we have? We had 10, 12, 13%. What we learned was that's the percentage of America that actually has no economic value, right? Because these are the people that don't pay taxes or they pay very low taxes or they don't report their taxes and they're in service industry. Therefore, for them to make money, other people need to be served, but other people don't need to be served to be participating in the economy, right? Like if I'm the CEO of Google, do I need to get a haircut to participate in tax revenue? No. So therefore, my hairstylist is out of a job. I'm still doing my job. The government's still making their money. And the hairstylist probably wasn't going to pay taxes anyway because they're under 50,000 or they don't report the tip I gave them. So COVID didn't do anything to the economy. It did everything to the psychosis, to the psychology of the investor. So when COVID happened, everything got shut down. Oh my God, what's going to happen? Everyone's like, oh, America's going to go out of business. No, America has a printing press. They always have, they always will. America has very large corporations that own government. They always have and they always will. America has the backbone of America, the capitalism of America will always be there as long as that's still going, right? The companies have the money. The companies own the government. That's fine. All the people that went out of business, though, that lost their job, how much money were they really making? Right? Like, you probably know people that had lost their job. What was their income? What you'll find is their income wasn't that high. Either they were a waiter, or they were a busboy, or they worked in a movie theater, or they worked at an event. They worked at some live venue, some entertainment, some service. Okay. Well, and you know what? I had friends that worked at these other professional industries like accounting or whatnot, and they lost their job. Did they though? Because I could tell you an accountant is always in demand. People need to do their taxes, right? Well, and people went online for their taxes because it's free. Yeah, those are the people that didn't really pay the accountants any money to begin with. They were doing what, 30, 40,000 of year revenue in taxes? What do you think they paid that accountant? $100 maybe, $200? The point is, of those that have a net worth that is material to the US economy, they were fine. And even more so than that, because they have a printing press, because corporation owns government, they were able to go ahead and share this message. Oh my God, things are so bad, because they're accountable to their shareholders. Right, wrong, indifferent, they're going to do anything they can for their shareholders because they are their shareholders. Okay. So when COVID happens, you can't just allow a whole bunch of people to die, right? Like, you can't allow people to lose their job and then mandate that they sit home. And then what? What income do they have? So you have unemployment. We all pay into it. Cool. Well, now, you never had unemployment where the government told you weren't allowed to get a job, right? You never had unemployment where someone said, not only can you not get a job, but there's probably not a job for you to get it. And if you could get it, you shouldn't go get it because you got to worry about your health. So big corporations like, all right, well, we have an opportunity here, right? Like, we have this thing called a printing press. We sell things in dollars, okay? Which means if we have more dollars in the economy, we get to sell more stuff. Okay, that sounds pretty cool. So how about we just print money? Let's call it a stimulus, right? Stimulus. We need to stimulate everyone. And those people that didn't contribute to the economy at all anyway, let's go ahead and give them more money than they ever had, right? Like, if we give them more money than they had, what are they going to do with it? Those people, they don't know how to handle money. They're going to go and just shop with us. Hey, let's give them a bunch of money. No, we're not going to give them money, government. You're going to give them money, and then we're just going to take it. Right? So government, how about, oh, I know you want your cut too, right? Like Nancy Pelosi, you probably want to trade some stocks, right? Like, you probably want to give it to your friends. We get it. Cool. You're the government. We're partners in this. No problem. So go ahead and print, I don't know, like $10 trillion and give maybe $1 trillion to people, right? Like $1 trillion, $2 trillion, $3 trillion. And I know the other 7, you can't put it in your pocket, but you can give it to an industry, right? And then buy stock on that industry. Or you can give it to public companies and just pretend like they didn't get it. Or your friend, your friend probably got a business. Why don't you give them a PPP loan? No problem. If they give you the money back, it's probably just because you were a consultant. No problem, right? So while the government and big corporations are completely looting the entire nation, they cannot do it. Like, they understand the top 1% knows one thing. They're not stupid. The top 1% knows the one thing they don't have is population. And they do know that's because over the entire history of time, people get the pitchforks out, right? Like, oh, we're going to get you, Marie Antoinette, off with your head, right? Nobody ever wants that. So if you're just going to print money out of thin air, you got to make sure you give it to the people. You got to feed the animals, right? So guys, enhanced unemployment, no problem. Here you go. Take it. You're probably just going to give it back to us anyway. It's like a casino. We give you free credit. You use it back over here. You're a loser. No big deal. Okay. So all the while, what actually happened? Corporations made more money than they ever did. Not only did they make more money than they ever did, but the consumer had the best balance sheet they ever had. Because what did government do? They suspended mortgages, they suspended all these different payments, companies suspended all these payments, credit cards, all the rest of the consumer got to sit home, be afraid of COVID, make a whole bunch of money, and then use it as they like. Well, I don't want to leave the house. Let me go on Amazon or Target.com or Walmart.com. So all of these companies started doing really well. Great. All the while, what these companies get the chance to do? Steal everyone else's customers. Because these companies were so large and because your small business was put out of business, they were able to grow their customer base. So they were able to cut prices, bring on more customers, knowing that when this whole pandemic ends, then you can never compete with them again. Because not only did they steal your customers, not only did they like burp and feed and pat your customers in the bum, rub their belly and tell them that they're beautiful, but they gave them lower prices than you ever could. And all that money that was printed is now inflationary. It raises the price of all goods and services. Therefore, for any small business to enter the economy and compete with the big businesses that stole their customers and to get their customers back, they have to buy product that is now more expensive than they remember, and they have to sell it for less than they ever remember getting it. Plus, they have to go ahead and get their employees back who you've now taken from them and you hired them for 20, 25 an hour when they remembered paying them only 15 an hour. How do you do it? You don't. That's what big business and big government did. They partnered and they've taken over the nation. But what does that mean to the stock market, right? Like that's what we're here for. That's what we're talking about. Well, in that environment, the stock market just goes up every day. In fact, in that environment, the stock market will continue to go up. In fact, in that environment, you go ahead and put that to, okay, so let's pretend I'm still working really, really high up here on Wall Street and you're my billion-dollar client, right? Because they made sure that I only spoke to those people. Now, granted, I got them all myself, but when your boss says, hey, Ann, I need you to take a meeting with someone, you say yes. And because I've always acted in complete ethical behavior and I was always the top performer, I love speaking to everyone. In fact, I have a Rolodex right now of people that have 9 figures in their bank account. That's not impressing you, that's impressing upon you, right? Like that's the world that I came from. Okay, let's take a sip of water, which by the way, this is tap water in a Vase bottle. I wish our Vase water tastes better, and it does, but I think the spout, right? Like the opening at the top is just larger. So if it's in the fridge, you get this big gush of cold water and you're like, ooh, I feel good. Anyway, enough about Vase. So if you were my billion-dollar client, I would say to you, well, you would say to me, right? Hey, Ann, I have $1 billion, where am I going to put it? And there's only 3 places, right? Do you want to put it in public, private, public or private, right? So 2 places, but private has 2 choices. So public is government debt. Private is private stock, like corporations, like stock market, or real estate. Okay, Mr. Jones, would you like to put your money in government bonds, corporate America stocks, or real estate? And corporate America meaning stocks and bonds, right? Okay, cool. So you would say, well, Ann, I don't know. I'm your $1 billion client. I'm here to talk to you. Like, what do you think I should do? Well, let's take a look at those 3 situations, because when you are managing trillions of dollars, when you're managing the elite, the 1% of this globe, they do not trade stocks. They don't say, hey, Ant, I got $10 billion. I'm looking to make 40% on like a swing trade with options today. What do you got? Because that money is so large that it moves markets. You cannot take $10 billion and trade in and out of a stock. It doesn't exist. It doesn't work. You can't do it. Do you know what happened if you took $10 billion and bought like, I don't know, what's a stupid stock? Like GoPro. The stock would go flying through the roof. And it would have nothing to do with the company. It would have to do with what do stocks go up and down on. The more buyers it goes up, the more sellers it goes down. So they have to look at the big picture. What's the macro thesis? What are the things that are going to last for years to come? Because they're not going to put their money in and take it right back out. All right, so let's take a look at public sector, government bonds. All right, well, the government guarantees your money, Mr. Jones. The government will never default on their money. It's guaranteed. You will get your money back plus the interest rate they give you. Okay, that sounds kind of cool. What's the interest rate they're giving me? Well, the 10-year right now is actually doing quite well. It's at 1.8%, which means if you give the government money for the next 10 years, you will not only get your money back, but you will get 1.8% on your money every single year. All right, well, that sounds good. But what's the opportunity cost? What are my other options? What is that relative to? What's the inflation rate? How about let's start there. What's the inflation rate? Well, the inflation rate is 6%. Whoa, 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 whoa. So you're telling me that I'm going to give you money for 10 years, that is going to lose 6% of value every year, and you're going to compensate that by giving me 1.8%. In what in the world does that make sense? So I'm guaranteeing myself I'm going to lose 4.2% a year. Does that sound like something I want to do? I'm a billionaire. You think I got to a billionaire because I'm an idiot? No, that doesn't sound good. Well, the government bonds, they are guaranteed. You don't want to take the risk in that world. Okay, I get what you're saying. So what's a bond? Well, it's a debt instrument, right? Like a bond is somebody that is looking to borrow money from you. I'm going to give you a bond, you're going to give me money, and I'm going to pay you your money back plus interest. So I'm borrowing from you, which means my value as a borrower is what is my balance sheet. If I have $1 trillion in cash and $0 in debt, I'm a pretty strong borrower. In fact, you would lend me money all day because you know you're going to get it back. And you know the value of that money is going to be exactly what you remember it, because I don't need to go ahead and find new borrowers or print new money to pay you back. But what is it in the US of A? What's it in America? Well, America owes $30 trillion. America pays 1.8% on that per year. And America comes into about $3.5 trillion worth of tax receipts a year. Okay. So 1.8% of $30 trillion is what? 180 billion, 360 billion, 540 billion, right? Yeah. So the US pays 540 billion every year to interest. Okay, so that $3.5 trillion of tax receipts comes out to 3 trillion. Okay. So the government has $3 trillion every year. Okay, what does it do with that money? Well, how much do you think it costs to run the country? How much do you think it costs to pay every dirtbag politician? How much do you think it costs to do for retirement, for pension, for Medicare, for Medicaid, for government obligations, for state obligations, for welfare programs, for entitlement programs, for congressmen today, for congressmen pensions, what do you think that costs? It costs more than 3 trillion. Have you ever seen the cost of healthcare? Have you seen it going up some crazy number every year? Do you think the government has any ability to pay you back any of that money? They have zero ability to do it. The only way they can pay it back is by borrowing more, which the last time I remember, I went to a good school, CBA, Christian Brothers Academy High School, St. Joseph's University in Philadelphia College. And what they told me was when someone borrows to pay you, to borrow from someone else, it's called a Ponzi scheme, right? And we all know that's what the US does. In fact, Social Security is a Ponzi scheme. We're going to take from these people, give it to you, and then we're going to take from those people and give, and it's fine. We kind of get it. There's certain things we allow. It's the government, it's cool, whatever. But if we were doing economics on it, we don't actually believe like that's going to like make any sense. So what we can say very clearly is that for the government to pay you back, they're going to have to print additional money and or borrow additional money to pay you back. Therefore, do you have any faith that the money you receive back is going to be worth the same, right? So if you print more money, it devalues all the money in existence, right? If I have 10 apples, they're all worth, say, $1. If I have 20 apples, now they're all worth 50 cents. The more supply equals less price per supply unit, right? Okay. But now there's the other thing. Well, how much demand is there for dollars? We're the currency reserve of the globe. So that throws in a different kicker because the whole world is over leveraged and so much garbage that when they go ahead and all the different credit institutions start crumbling, they all settle their transactions in dollars. We're the currency reserve. Any buy or sell on a global scale has to settle in dollars. Therefore, when you have a globe that's crashing, you have a dollar that spikes up because every buy or sell, and it happens very quickly because things are falling, happen in dollars. Therefore, there is a potential that you can say, I do want to own bonds because I believe the world is going to be so bad that people are going to run to bonds for safety. And at the same time, the dollar is going to move up in so much value that it's going to go ahead and offset the inflation rate of that 6%. Now, remember, I'm not like a genius. People own the bond at 1.8%. That's what they're saying. They're saying two things. One, we believe that things are getting really, really bad, that we're going to just take this guaranteed 1.8%, knowing that it might possibly lose us 4% a year, but we know it's guaranteed, we know it's safe. But they're also saying that they believe that because things are going to get so bad, the dollar is going to spike up, the inflation rate is going to come down, therefore the investment in that bond, the interest rate they're going to receive from that bond is actually going to be more than what we see inflation as in the future. Confusing stuff, right? Okay. But at the end of the day, do you want to do all that confusion? That's quite the risk, right? At the end of the day, government owes 30 trillion and comes into about 3.5 trillion a year. In fact, here's the other kicker to that. If they're not correct, and if the inflation rate goes higher, and if the Fed comes out and raise rates, the interest rate to the bonds go higher. Well, what happens to the government that owes money on their bonds, right? So the government owes X amount of percentage on the 30 trillion they borrowed. If the yield goes up, the money that they owe goes up. So let's say the yield goes from 1.8% to like 2%. That 540 billion the government owes is now 600 billion, which means that 3.5 trillion of tax receipts the government comes into is not 3 trillion anymore. It's now 2.9 trillion because 600 billion is already gone. There's a lot of moving components that it's really messy. It's really gross. Who would put all their money there? And especially with this Congress and this regime, do you really trust that government is going to take care of your money? I mean, I don't think so. But I can understand how people might want to buy bonds here and there. I'm actually a proponent of wanting to trade bonds. I think that right now, bonds offer a great value. But that's just my opinion. We have to see if the charts match up. Now, remember, this is an hour program, which means I have 33 more minutes. We are going to go into stocks. I just need to make sure that you have a proper background because you should know economics a little bit, right? Like trading stocks is not as easy as looking at a chart and saying, okay, I'm going to buy this. You have to have an opinion. You have to have a certain semblance of education as well. So that's the risk reward of owning a bond. What about the companies? What about corporate America? Well, like we said, corporate America not only owns the government, but how much money do they have sitting around? Microsoft just paid $70 billion for Activision today. Corporate America has a lot of money. Their balance sheets are pristine. Remember, what's their labor cost? Their labor cost has collapsed because how many people have they fired? Not because, oh, we don't want you here, but like, oh, COVID happened. This gives us the perfect opportunity. Oh, we're downsizing. Our profits aren't up. We need to downsize. And what do they do in place of downsizing? They automated all those positions. What you need to know is AI and automation is a real thing. And 20 years from now, 80% of your jobs aren't even going to exist, right? Like if you're a surgeon, Intuitive Surgical is going to go ahead and do the surgeries for you. If you're a doctor, WebMD could probably do your job for you. And I don't mean that. I have a thing about doctors, right? Like, because of their malpractice and because of the over amount of caution they take, if you're just a general practitioner, you're no better than WebMD, right? That's not a commentary on you as a person. You worked hard for your position, but the value proposition that your position is something that could be looked up. Like, oh, excuse me, doctor, I have these symptoms. Oh, well, according to my brain, you probably have this. Let's do this. Well, the computer could do that, right? The point is, there's a lot of positions, not just service, but high professional positions that can be automated. This COVID has only accelerated that. Therefore, these companies are already pioneering that. So there's many positions that are gone that are never going to come back. So the labor cost of these companies has gone down. The efficiency has gone up because computers make a lot more money than people when they cost a lot less as overhead. And all these companies came into a whole bunch of new customers. So a company gets more customers, they raise their revenue, they raise their efficiency, they go ahead and decrease their labor. Wouldn't you want to lend money to them? Wouldn't you want to be a part of those things? Those are really great. I'd rather be a part of that than the government any day of the week. Well, and what about if the government raises taxes on these companies? Yeah, that's a risk. But these companies own the government. If they go ahead and raise taxes on these companies, they'll go ahead and say, all right, we kind of knew that was going to happen, but we're making so much over here, we're good with it, right? So I don't even think that's a risk. do I want to own corporate America? Well, and if everything goes bad, like you said, or you think people might think, what would happen to corporate America? Well, they would lose customers, right? Like they would lose some money, but they have balance sheets to withstand that. In fact, if you're buying the really, really large companies, then when things get bad, who gets hurt? The really large companies with hundreds of billions in cash, or the little growth companies that now go out of business because they were so economically sensitive? Well, what happens in that scenario? The really, really big companies say, we have all this cash. We see that you're about to go out of business because the economy's not good. We're just going to buy your company, bring you over here. And now our company's even bigger. Now our company's even better. Oh yeah, we own government. Now we own all the customers. Now we're able to own small business. Wow, I'm doing pretty good as a big company here. Big company in America is a pretty good place to be. It's called a monopoly. And it's not called a monopoly in the sense of I monopolized like this table of goods. I monopolize the country. I own the government. I own the money. I own the small business. Right? So that's a good place to be. In fact, if I had to choose between, do I want to lend the government money or I want to buy? Okay, well, and what you said, like there's this inflation thing, right? Like inflation and the more money they print, the less value of the dollar. Doesn't that hurt companies? Well, yeah, if they're outside the US, right? So if a company's doing business in the US, what do they do business in? They do business in US dollars. And if you're the currency reserve of the globe, what does everyone have to do business with you in? US dollars. Therefore, if the US dollar goes down in value, what happens to your revenue? It doesn't, the revenue you have goes down in value as well, right? Like if I have $100 in revenue and the dollar goes down in value, well, now that $100 in revenue goes down. But what's the offset? If I'm a big company, I pass along that cost. All right, so I bought a hammer for $5. Now the dollar went down, so it cost me more dollars to buy a hammer. I bought a hammer for $6. Remember yesterday when I sold it to you for 10? You think it's 10 today? No, it cost me more. Now it's 11 to you. Companies go ahead and offset inflation because they do business in the currency. So in an inflationary environment, companies are your hedge against it because they do business in that currency. Even more so than that, companies are valued in dollars. Therefore, if the value of the dollar goes down, what happens to the value of the company in dollars? It goes up because it takes more dollars to buy it. Therefore, not only does the company offset the decline in the dollar value, but their stock price goes up because it takes more dollars to buy the company. Therefore, in an inflationary environment, you want to own stocks. In every environment that we're describing right now, you want to own stocks because your choices, it's not, do I want to own stocks in a vacuum? It's what are your other choices? Your other choices are lending money to this government. Are you out of your mind to think you would do that? In fact, you can actually see the whole world not doing that because you see all the money coming into the US stock market, right? So what's your last choice? Real estate. Okay, well, real estate's pretty cool. So real estate, I think I read something, God's not making any new land anytime soon. So that's pretty good. You can't make new land. Real estate, what happens if inflation comes? Well, real estate's a hard asset. The value of the house will go up because it's priced in dollars. Therefore, if inflation comes and lowers the price of the currency, the home price will offset it by raising the price of the house, right? Because it takes more dollars to buy it. Okay, people still need to live somewhere, right? Like if the economy is really bad, that means people can't buy homes. Well, they need to live somewhere, which means they're going to go rent homes, which means if you own a home, it's a good investment property because people now are going to pay you monthly reoccurring rent. Well, if the economy is bad, how are they going to do that? Well, there's government programs. They'll go ahead and get government stipends, welfare, and all the rest to afford those homes. Therefore, real estate is a really good investment in some type of inflationary environment or in an environment where you believe the economy is going to go down. But here's the line in the sand. Who's the economy going down for? If the economy is going down for everyone, then real estate's not good because the real estate value, the median price is magnetized by the high buyer, right? If Jeff Bezos buys a house for 50 million, that raises the median price for the 100,000 people that buy it for 100,000, right? Who's the economy going down for? We've already shown COVID. There's a dichotomy. If you're in the top 1%, this is the best economy you could ever live in. Everything is going in your favor because you own the government, you own all the customers, you have no competition, and the dollar is in your value, right? What's going on? Good. Can you still see me? Because this thing just restarted. Okay, cool. Let me just Okay. So if you're, oh, cool, thank you so much. So if you're one of the top 1%, you're doing fine. In fact, you love this economy. In fact, you love it so much that you get to come out and pretend you don't love it. Like, oh, wealth distribution, wealth inequality, fairness in race, fairness in gender, fairness in, oh, it's like, come on. Everyone knows you're full of it, right? Like, get out of my face. But the 99%, this economy is not good for. But if the top 1% is doing well, they could afford the investment. They have so much money, they can invest in anything. They can buy the property, they can buy the real estate. And the bottom 99% can't compete to buy the price, to buy the real estate. All they can do is choose to die on the street, live with their mother, or pay the rent that you're forcing upon them. Therefore, real estate is a really great investment, especially with rates as low as they are. And if you believe that there's a credit situation happening globally, well, then those rates are never going to go higher. And here's a little secret. So the Federal Reserve and everyone's are so afraid that the US is going to raise rates this year. Let me tell you a little secret. When you owe $30 trillion and you have no ability to pay it, do you go ahead and raise rates on yourself? Seriously, in what world would anyone do that? And sorry for cursing, but it's like, I bleep myself out, first of all. But it's crazy town USA to think this government, in the best of times, can't even afford themselves. They're trying to do universal everything for everyone, and they're going to go ahead and raise rates on themselves 4 times this year, right? So 1%. And guess what happens when you start raising rates on bonds? Everyone that owns the bonds that says that there's no way you're going to raise it, say, oh, we were wrong. What happens to a bond price when yields go up? Let's figure it out. So if I own a bond at 1%, let's say it's worth $100. Great. It's worth $100. I get 1% a year. If tomorrow a new bond comes out at 1.25%, what happens to the value of my bond? Who the hell is paying me $100 anymore when they could buy the new bond for $100? Now my bond went down in value. Now it's maybe worth only 90. So here's the key. If all of a sudden the government raises rates like they're pretending they're going to do, which is a complete crop, I can guarantee you right now that will never happen. Then not only do they raise rates on themselves to pay on $30 trillion worth of debt, but they unleash everyone in the bond market who doesn't believe they're going to do it. And those people, when they're unleashed, you know what they do? They sell the bond. Of course, who owns an asset that they know is going to go down in value? The second the government raises rates, they know, oh man, this is over. The good times are done. This bond's going to go down in value. So they sell. Do you know what happens when a $30 trillion market all decides to sell at the same time? Do you know what happened to the yield of those bonds? They would go to 4, 5, 6, 7, 10%. Do you know if the 10-year bond goes to 12%, that equals $3.5 trillion? Do you know if that happened, the government would actually be net neutral for a year? That the tax receipts would be offset with interest payments? Do you know what would happen to this country if all of a sudden there's no money to pay like your pension or Medicare? Imagine if there was no money from the government to do anything. I haven't paid the postman. Zero, zilch, nada. Do you think they would ever let that happen? Now, one could say, well, Ant, it's kind of out of their control. They can't let it happen. Yeah, sure, I agree with you. But they're not going to move it forward to happen. They're not going to raise those rates. Therefore, our belief is the irrational intermediate fear that the rates are going to rise, which is going to create a market that scares everyone, that tech should get annihilated and stocks should get annihilated and everything should get annihilated, is false. We believe that that narrative has been perpetuated to go ahead and offset and to describe what we see as liquidation. Again, we started with everyone was fat and happy and complacent. When things come down, what happens? People get scared. Oh my God, things are going down. They were going so good. They went down a little bit. I bought more. They went down a little bit more. I bought more. And it's still going down. Let me just sell. Hedge fund managers, pension fund managers, all the biggest stockbrokers are all owning all of this garbage. Apple, Amazon, not that the companies are garbage, but the stocks have been garbage because they're so valued. Do you know Apple was worth $3 trillion? I get it. There's an iPhone. Really cool. A company worth $3 trillion, that's a lot of money. Now, Anthony, sure, it could be worth $3 trillion, it could be worth $4 trillion, it could be worth anything it wants. But the point is, that's a lot of money. These companies are all worth a lot. Apple was $1 trillion like 3 years ago, 5 years ago, whatever. The point is they all went too far too fast and everyone found comfort in it. When things are all going up, the top investment banker says to you, hey, listen, I think you should buy this. It's a good purchase, right? Okay, great. You buy it, it goes up. Then the next level says, oh, they do their homework. Apple's a good company. It's been going up. And they tell their clients, hey, we did homework on this company, Apple. It's going up. You should buy it. Okay, great. And it keeps going up. Then the third tier is like, oh, you know what? This Apple thing, everyone's making money on it. Let me go tell my clients, hey, guys, this Apple, it's going up. Okay. Then it gets to the fourth tier, the dirtbag stockbroker that's doing cocaine in his bathroom all day, that does nothing from nothing, that calls you, opens you an account on Apple because Apple's safe, everyone loves it. And then once you own Apple, they go ahead and release the DOGSHIT on you until you start buying the $1 biotechs, right? But Apple is what they call a cornerstone. It's the trophy of your account. No matter how much crap they sell you, you own Apple. Well, you still got Apple and it keeps your account over water. Okay, great. Now these dirtbag stockbrokers are like, guys, this is so easy. We just keep owning Apple. Everyone wants to own Apple. In fact, if someone doesn't own Apple, I'm able to yell at them. How do you not own Apple? Look at what's going on. And they own Apple. Great. Now all of those people that open the accounts with the stockbrokers think they're smart. They go to their friends and say, I bought this $1 biotech, it went up, because everything's going up. Do you remember last year? Everything went up. Oh, I bought this. And well, it starts with Apple. Oh, you don't even own Apple? Well, what's wrong with you? You have to own Apple. If I said to you right now, is there a reason not to own Apple? Everyone would say no. Apple's a great company. Well, then who's left to buy it? That's the problem. When everyone owns it, there's no one left to buy it. So Apple starts going down in value, right? So when the stock market starts coming in, everyone sells what they can. All right, I'll take some trimmings over here, I'll take some trimmings there, but I'm owning my Apple. Like Apple, that's my Apple. Like I'm keeping my Apple. Yeah, I'll sell a little bit of this, but I'm keeping my Apple. Then the account goes down further and further, and Apple's getting hit, and someone's like, what the fuck is going on? I'm not selling my Apple. That's the best company. They make iPhones and Steve Jobs and Tim Cook. I'm not doing it. And then it goes down more and it goes down more. And then they're like, you know what? I can't do this no more. Just sell my Apple. Just get rid of it. Just sell it. And that's the moment that you reach the bottom, because that person was never going to sell their Apple. Now they did because of pain, because of what they saw. They only bought Apple because they believed it was always going to go up. Once it started going down, they still believed it was going to go up. In fact, they bought more of it. Then it got to a point where they capitulated and said, guys, enough. I don't want to know anything about anything. Just sell my Apple. Okay. Are we there yet? Right? Is today that day? I don't know the answer to that. But my thesis is that this pullback, which we predicted, right? Like you could look in the accounts. We haven't purchased anything since the beginning of November. So you could say, Ant, that's cute. It's easy to say that. Well, go take a look. We didn't buy a single thing. Well, if you thought that, you would have shorted it. Yeah, maybe. You know what? I do 1,000 things, and maybe I'm not that smart, right? But I know I was smart enough not to buy any of the prices that people would throw bargains, because it's only a bargain relative to what it's going to be. If something's $5 and it was $10 last week, you might say a bargain. But if it's $1 next week, I don't think that was a bargain. So you have to have a certain insight in what you believe is going to happen, right? So with that said, our opinion is that this pullback is temporary, that this pullback is offering a buying opportunity, because anyone with any real money will always choose to put the money in corporate America and real estate. And so corporate bonds, corporate stocks, and real estate over giving it to the United States government. And those are the only two choices to make. Therefore, when things get to a certain point, companies, investors will take their money and say, okay, I don't care if it goes lower. I want to get in here because this is what I'm going to hold for the next 10 years. And what allows me to say that with a little bit more oomph today, which I don't need because I'm pretty sure of what I'm saying, it's not a coincidence. Microsoft just came out and bought Activision for $70 billion. So what did Microsoft say? Microsoft says, I have a bunch of money. Where am I going to put it? Because Microsoft could buy bonds. What do you think? What do you think? They don't buy bonds? That's cash equivalents on their balance sheet. Take a look, cash equivalents. All right, I'm Microsoft, the economy's crap, everything's going bad. Let's just buy 100 billion in bonds so that we know the money's safe. We get a return on it, no big deal, we'll fight another day. No, they did not do that. They said, actually, we'll go buy stock. Microsoft themselves, in their infinite wisdom and infinite blah, 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 showed you the way. They said, with their money, for their expertise, they're a buyer of stocks. So who am I to say otherwise, right? So, okay, so that was a little bit of like an intro, right? Intro. So let's go take a look what the stock market's actually doing today. So we're going to do a share screen. All right. So this looks ugly, right? So the market's down 528 points. The S&P's down 1.5%. The Nasdaq's down 1.5%. The Russell's down a little bit less than 1.5%. The VIX is up 15%. So let's go back to basics, right? So everyone that's been part of Rhino Wealth, which was formerly called Rhino Premier, but I'm calling it Rhino Wealth now, has known that our foundation is price, volume, volatility. Before we got fancy and offered all the algorithms, we did it by hand, right? Like before the calculator, we carried the long division. So let's go and pull up a chart of S&P. Now, this is the SPY. This is the ETF that tracks the S&P. The reason we're pulling this up is because it has volume, which means we can look at volume. Let's compare it to the volatility in a new pane. All right. Let's get rid of this stuff. We don't really need this over here. Okay. So when we take a look at the S&P, this is price, volume, volatility. All these arrows are really cute. I like them. They make me happy. And sometimes it's really that easy of a description, right? It makes me happy. Okay. So what we can see is when the price was going up and the volume was going up and the volatility was going down, what did that tell us? Okay. And I know what you're saying, right? Like this looks even, but it's not. This is lower. This is higher than this, which is higher than this, which is higher than this. So you can see the volume going up steadily. You can see the price going up. You can see the volatility going down. What does that mean? What is volatility? Let me show you what volatility looks like. All right. Stocks are going up. My account's going up. Cool. Cool. Yeah, babe, I'll be home for dinner. No problem. Yeah, my stocks are going up. Yeah, hey, I'll catch you on the flip side. You look good today. Look at your hair. Don't forget to wear clean underwear. I think I'll have some sushi today. That's what volatility looks like when stocks go up. You could see my volatility, my volatile nature is going down, right? I don't look very volatile. Like, look at this pen. It's a great pen. I love pens, right? Cool. What does volatility look like when stocks are going down? Ah! How is this going down again? Like, seriously, I just bought more of it yesterday. No, babe, I don't know. Leave me alone. Go make whatever the hell you want. Leave me alone. Oh, my God. How am I going to pay my rent this month? How am I going to pay my mortgage? All right, just calm down, man. Oh! You know what? I can't take this anymore. So that's what volatility looks like when stocks are going down. You can see my volatility rates. This right here measures that. Thanks, Mike. This measures that. And the way this measures it, it measures the difference in premiums paid for both call and put options of short date versus long date. Now, an option contract is a contract that you're making with someone where you're betting a certain stock to be a certain price by a certain date. So it's a derivative of the stock. You don't own anything. You just own the contract. To go ahead and make that bet, you have to have a very, very good certainty that the stock's going to be that price by that date. Otherwise, that bet goes to zero. And you pay someone for that bet. So not only does the bet go to zero, but you gave someone money for a $0 bet. Conversely, maybe you own a bunch of stock and you want to make sure that you protect the downside, right? If the stock goes down, I want to be protected. So you buy a put option, which means I'm going to pay someone a premium that if a stock goes under 11, I could put it all to them. So yeah, I own stock at 10. I bought the put option at 8. If the stock goes to 5 or 6, I know that I could guarantee to put it to someone at 8 because I bought that. Meaning the premium for those contracts go ahead and illustrate the emotional value of the volatility of people, right? So if the stock market is crashing, everyone's buying put contracts. Oh, I don't know what's going on. Just put contracts. I need to protect my position. So the contract premiums go really high. Conversely, when stocks are going through the moon, the call option prices are going up. That the increase in premium call option versus the increase or decrease in premium of the put option equals this chart right here. I know that was a little confusing, but just stay with me. Just know that I know what I'm talking about, right? And so actually, let's not do that. After this presentation, you're able to now go onto YouTube or whatever and say, okay, I want to continue education. Let me learn options. What is the VIX, the VIX? How does it calculate it? So you can teach yourself a little more, right? So all of this is cool, right? All right, price is going down. Volume is staying the same. Volatility is going up. Well, that's kind of ugly. All right, so what's going to happen? All right, so volatility stopped going down. Look at that, it stopped going down, right? No more volatility. Volatility is going down. And the volume is down, but look, now it went up. All right, so volume's bottomed out, it's starting to go up, volatility is going down. What would that mean to price? You probably already know. It means price would go up. All right, so that's all cool, Anthony. Great magic show. Tell us where we are. Okay, so let's take a look, like real time. As you can see, I don't have an arrow here. I did not do this. All right, price is going down, right? That's really obvious. Yucky, yucky, yucky price. Let's see what volume's doing. Volume is going up, right? What's happening to volatility? Volatility is going up. Do you know what happens when volume's going up, volatility's going up, and price is going down? That's really, really ugly. It means the lower stocks go, more people are still selling. There's no abatement in the selling. People are still selling, and people are still getting more volatile. They have not caught themselves yet. But this volume and this volume doesn't look that much higher than this volume, right? Now, this volume you can't really count because this isn't a whole day. In fact, the market's only been open for an hour. So let's see if we could kind of cheat a little bit and take a look at an hour chart, right? What we can so clearly see is that the last hour of the market on, so actually, what's this? So the first hour today is higher than the last hour the day before, and that volume was continuing to go up. But what was the stock market doing during that time? It was actually going up. Volume was going up as the stock was going up, and volatility was going down. This is the first time we're seeing this. Now, yeah, we saw volatility spike, and we see stocks going down, and we see the volume spike. But does it look like it's kind of getting towards an end? I don't know. It looks like it's starting to get a little exhausted, right? And we're only going to know that when we see what this volume looks like today. Now, what we can also see is this is a red, so it's getting that coiled spring, and this is a green. There's money flow coming in. This is the S&P index. This S&P tells me that we're closer to an intermediate bottom than a pervasive just continued selling, right? I have a couple of chat things. We are done when we take humanity out of the equation. Good stuff. Hold on. Quite the performance, Anthony. We are at the beginning of different stages. This is good stuff. Okay. So what does it mean to these stocks? Now, we already did the work on this list. This is a list of stocks that all meet the criteria. Hold on. Let's get rid of this. All right. So this is a Bitcoin stock that we shared. It went up a little bit, and now it doesn't look like it's going up, so that's fine. Everyone made money here that purchased it. Cool. This is an interesting stock because it's 24 red and green, and we've been saying so when we talk about 20 red and green, that's golden. Like, we buy that, right? Like, that's what we should be doing. And let me rephrase that. I buy that. That's what I like doing. I find that to be a good idea, right? That being said, it also has to corroborate with its volume and its market cap. This market cap is less than 100 million. This company, someone could, like, Apple makes more than 100 million in 10 minutes, right? So it doesn't have the volume, it doesn't have the market cap, it doesn't have the size to go ahead and vindicate and justify this, which means this is highly risky. Now, we have it out there. So if there are those traders that like penny stocks, this is that. Don, what are the indicators you're using for red and green? Well, Don, that's a secret, right? So that's part of everything that we're doing here. That's kind of the algorithms we created. So can't really tell you how the sausage is made. I can just tell you that I'm going to always give you the best research. But actually, maybe one day I will just give it to everyone. I'm kind of moving in that direction. Why do I have someone calling me? I don't know who that guy is. All right, let's see. Hopefully I'm still there. All right, cool. I love when people call my cell phone. I don't actually like talking to anybody. All right, so let's go. So it's 10:55. We have 5 minutes left. So let's go down this list. So this is a 15 red and green. This market cap is only 200 million, so we're not really a fan of it, but 15 red and green catches our attention. Netflix, that's a very large company, 14 red and green. And tomorrow, Netflix reports earnings after the bell. Now, earnings is a big event because once a quarter, a company comes out and shows you their books. Those books really move a stock higher or lower because you get a very good perception of what that company's doing. Etsy is a 15 red and green. Etsy, we like very much. Etsy, if we weren't spending all this time talking and teaching, we might have purchased this morning when it was as low as 158, right? Chipotle Mexican Grills, a 13 red and green. Manpower is a 13 red and green. Now, these companies, like the fact that these are all 13, it took me a long time to find them. That being said, the market is down 550 right now. All the people that are trying to buy these stocks are saying to themselves, all right, this can't go any lower. This is the time to get in. I'm going to dip my toe here. I'm going to buy some stock here. And if it goes lower, I'll buy some more. But this is where I'm going to start dipping my toe. Which means maybe we should too, right? Like maybe we should buy something here, right? But if this is truly a liquidation event, I don't think there's enough pain. Like these guys, 13, 14, 15, these are the highest numbers we have. I want to see 16. I want to see 17. I want to see more pain. So I'm not going to buy anything today, but I think we're close. And I think I can say that I will buy something tomorrow. So my hopes are that the stock market goes down today. My hopes is that I would be the happiest person if the market started down 1,000 tomorrow. That would be the best thing in the entire history of the world because we would have such an easy shot at making money. So while sharing my commentary with you, what I would like to share with you is that tomorrow we're going to go through this list. We're going to spend maybe 5 minutes talking about the market. We're going to go through this list and we are going to buy something. So for anyone that wants to play along, have some money in an account. For anyone that wants to seriously play along, and not to say the first is not serious, but what we're personally going to be doing is buying option contracts. So make sure you're approved for options if you want to buy what we buy. Did someone buy Exela? I don't know. But I mean, it's now 24 red and green. It's up on the day, but I don't know anything about this company. I know nothing of what they do, and I know the company's worth less than 100 million. So, I mean, tomorrow the company can be zero, right? Like there's probably a reason it keeps coming down, but the money flow is going to it. It's really becoming a coiled spring. If this was an S&P company, 4% by you. If this was an S&P company, or if this was a company that had over $500 million of market cap, I'd buy it right now. I really would. I wouldn't even think twice. If this was an S&P company that had billions, I'd buy it right now and be so happy. I'd call my wife and say, ha, we did it, don't worry. But I can't trust it like that because look, when it was 16, it was 80 cents, 81 cents. It's now 51 cents, which means it lost, what's that come out to? 47% since being a 16 red and green. How about a 20 red and green? It was 63 cents. It's lost about 14% since then. So every one of these times has been the wrong decision to buy it. So I can't trust it. So we'll see. The euro dollar interest rate is increasing. Do you see it staying low as well? Not euro currency. I don't know. I think the dollar moves up, which means I believe the euro to move down. First of all, Europe is a complete mess. The reason why Europe's a mess is because when they created the euro, they said, all right, guys, listen, we're going to go ahead and have a currency for our continent. But what they never did was create a continental debt, right? So in the US, we're able to manage our currency by raising interest rates up or down because those interest rates affect the country, affect the currency of the country. In Europe, Germany's doing well, while maybe Spain's not doing well. So Spain wants interest rates lowered, while Germany wants interest rates higher. But they have the same currency. So you cannot actually have a monetary policy for Europe with a whole bunch of different debts. Therefore, Europe can only go ahead and survive in the long term if it just becomes one, if the debt is all combined, which I suspect it probably will, which is why I believe people buy Euro bonds in Germany, because they believe that at some point when this whole thing falls apart, the currency will be worth more. So I can't really speak to that. Sweden, right? Sweden is great. Sweden and Switzerland are like I've never been to either. One has good massages, one has good chocolates, and I believe they both have, not going to comment on what the girls might look like because I'm a lovely married man. But I imagine if someone like tall, skinny, blonde girls, I've seen them on TV, right? So Sweden and Switzerland, chocolate massages and, pretty people, probably great places. And they're wildly smart because they understood we're not getting into that nonsense. Are you kidding me? Which is why England is really smart too. They're like, guys, enough of you. We have the pounds, like you guys go do that, right? TV is not reality. Well, Mike, I don't know if you've seen my wife, but she is opposite of what I just described, and she's my type times a million. So TV or not, I give it to you in Sweden, right? All right, it's 11:01. We're going to get going. Tomorrow, we're going to be buying something. Our hopes are that this market continues lower today, and please, please, please start lower tomorrow. Either way, we're going to find something because we did the work to go ahead and identify all of these stocks. So even if we don't get our hopes, right, like if the market doesn't end down or blah, 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 there will be one that's still down. There will be one that's the red-headed stepchild that no one's giving attention to. And that's the one we're going to give attention to. So I think we're doing good, guys. What I can say is anyone over the last 3 weeks that bought something, thought they were really smart, right now they do not feel smart. I don't care what they say to you, they do not feel smart. It is having patience and persistence and experience to know when to get in and when to get out. And we are sitting in just cash. You know how I could show you that? Watch. We are sitting in just cash. So we did not lose a single dollar today. In fact, we're able to buy more of anything we buy because we don't own it yet. Prices are coming down. Wall Street is the only place that when things go on sale, people run away. You want to own a Ferrari? If a Ferrari is 100,000 today and all of a sudden it's 70,000 tomorrow, do you say to that Ferrari dealer, no, I don't want it. I want to pay only 100 for it. No, you pay. That's how we look at this stuff. So tomorrow, it's going to be fun. Is there anything to look at on the crypto side? Not really. So not yet, at least. And in fact, I'm waiting for Bitcoin to crash under 40,000. I don't know if it does. I hope it does, because I think that will be the crescendo moment. What I can show you is, so I'm looking at things right now on a 4-hour bar. So this is not a daily, this is a 4-hour, so this is not as reliable as what we were just looking at. That being said, Bitcoin is showing 13 red, no green, but it was just showing 12 red and green, and look, it popped up. It's not holding that green, so I kind of think it's probably going to come back down. But let's do a quick run through for my best friend, Mike. See if there's anything. 11 red, no green on Ethereum. So it's confirming that the money is very, like, it's not really jumping in there. Same thing with Bitcoin and Tether. Look at the one we did recommend, though. How awesome was that? You know, sometimes you're just good. Oh, DOT. 13 red and green. So if someone's interested, I guess that's Polkadot, right? I don't know them. So DOT is looking good. In fact, we'll even put it on our list. Maybe we'll look at it tomorrow. What is this? Hold on. Come on, computer. Thought I just saw like a 16. Oh, XRP. What is this? Wriggle, something like that. 16 red, no green, but it was just 15 red and green. So what is that called? Tell me, Mike. XRP. Ripple, thank you. Ripple might be on the list, right? It doesn't have a green, but it's a 16. So we'll go ahead and put that there. Dot's our favorite. Ripple's number 2. Ava is a 12 red and green, so they're under Dot. So Dot's 1, Ava's 2, Ripple's 3. Reef is tied with Ripple for 16 red, no green. And I'm actually going to write this in the chat. Link is behind Ava. 11. 12 red, no green. 11 red, no green. Shiba red, no green. Bitcoin red, no green. Cake is not a number at all. Really should be though, shouldn't it? No, I guess not. Let's Ripple again. 1 inch. Sounds like a horrible date. 12 red, no, 12 red and green. So let's do that. Bitcoin again, 13 red, no green. And Matic doesn't have a number. All right. What is the software using here at TradingView? So tradingview.com is a software. All right, so what looks like the best is Dot and Ava. And then Link and XRP. Come on, man, XRP. You know, if I want to type that, I would. 16 red, no green. Yeah, so I think that's that for now. All right, guys, have so much fun. Tomorrow we're gonna buy something and hopefully we all become millionaires, right? Frida, it's okay. We're trying to teach it. This is all complicated stuff, but if you just stick around, I think you'll at least learn through osmosis, right? Love everyone. I'll see you tomorrow. Bye.